at the end of the day, all that really matters to me is deals to invest in. Like that's the greatest thing. Like if WeFunder does great, that's awesome. If Star Engine does great, that's awesome. If another small portal is great, that's awesome too. But more deals is great, and the more competition of the platforms, the cheaper it is for the fees, and easier it is for companies. More understanding of the industry. It's great.
What's going on, everybody, and welcome back to another episode of the Next Big Thing podcast, where today we are joined by Tim Scafaria, the CTO and co-founder of Hubtas. For those of you that don't know, Hubtas provides access to a wealth of investment data for crowdfunding companies that is typically difficult to find and break down. We were talking about it earlier, a perfect analogy, think Bloomberg meets PitchBook for retail investors. So with that being said, Tim, thanks for the time. Excited to hear about Hubtas and welcome on the podcast.
Well, thanks so much for having me. I'm really a big fan of this podcast, as we talked about earlier. So I've been looking forward to this for a while.
Awesome. So why don't you get into it, pull up your demo and show us what Hubtas is all about.
Fantastic. This is right now live demo. And Hubtas.com is a Bloomberg meets PitchBook, as we talked about, for equity crowdfunding investors. For people that have other things to do, it's really hard to sift through 10 to 20 of these equity crowdfunding filings a day across 20 different platforms. You have Star Engine, WeFunder, but many more, debt offerings, convertible note offerings. So it simplifies the process of finding investments. And we have what I believe is to be the most powerful advanced startup screener in the industry. This is a non-logged in view, all free right there. And then you can sort by 14 free categories, and then 25 more. These will also be free when you just log in and make an account. But what I'm really excited about too is building your custom algorithm. So taking a search point and click is cool. And you can be like, okay, I want to filter out these companies. I might find companies that are good for me. But what I think takes this to the next level, Hubtas, is having different weighting systems based on different facts about the company. So we have, I think, 13 here or 12. Where you can weight them differently or use our presets. Y Combinator, we did some research on. I can explain that part later. ChatGPT, I just asked ChatGPT, for example. But you can build your own and then get automated alerts to your email. So you can be like, I want to get my custom algorithm, which is just already up there right on the URL. You can then just submit it, and then you get emails every day with that. It's super cheap and affordable. I made it for, my co-founder and I made it for retail startup investors. So $10 a month if you want to buy it annually, $15 a month for yearly. And I'll give you an example of a company page. So let me log in real quick. So here's, let's say you're interested in finding more information about a company. Let's say Hawaiian Bros, for example. I'm logged in, so it's probably a normal PitchBook-like interface. You get overview, financial summary, use proceeds, offering page, offering details, and then our quant score. So the quant score is 36 or so different factors. We were inspired by quant investing. So instead of saying like, I want to look at companies that have like or I just want to read out through all the filings, why not just use like a quick heuristic of this might be a good offering for me to look at further. And these are our opinions. I mean, whether companies VC backed or not is a fact. We took the opinion in this example that VC backing would be a positive or a pass. And they're all equal weighted, and you can just see them in this way right there. Company, right, you get directors and officers breakdown, company ownership, patents, their financials for 3 years, if they have 3 years, advanced financials, which is like, secondary calculations. So price of sales or cash per employee, just more nitty gritty data. And then comparables, so you can just compare it to other companies in that same industry. And then reviews. Hopefully that review functionality will take off, but it's there. And that's that right now. You can subscribe to our newsletter. You can see the highest quant scores currently. And if you don't know where to start, you can always check out some of our investment ideas. So a lot of these numbers and filters and just can be a little bit confusing and overwhelming at first. It's built to be very powerful, but if you're just interested in like getting started, we have our ideas page. And that's found, let's see. Oh, actually, I guess I got to put it in the URL again. But you just have some preset ideas. So you want to see like, okay, companies that are under $5 per share, or companies in the AI space. Here's some, let's see, companies that close in their raise within a week. That's pretty cool. And then you can be like, okay, here are 16 companies closing within a week. I want to look at companies that have, let's say, that are also VC backed. Search it, and then you can just narrow it down further. Any questions there?
It's great. I do want to say, Tim, I love Hubtas. I use it every other day. And it's nice that all the information's on one centralized platform and being able to navigate it. I was shocked with how easy it was able to navigate and to learn how to use it, to take the data, to go to other links from that platform. It really saves me a lot of time. But before we get into the details of Hubtas, can you tell us how you got into crowdfunding and kind of the story behind starting Hubtas?
Totally, I'd love to. And one, I'm really glad you pointed out the easy use. I just want to touch on that real quick. We put a lot of time into the front end and the ease of use because I thought it was important. But I think a lot of the value, what we spent the last month on, from where our soft launch, from where we're actually ready to actually launch, as soon as tomorrow, the next day, is the back end. So there's a lot of automation now. It's very powerful. I think a lot of the value is there that what you don't see. I just wanted to highlight that. Absolutely. I mean, the story of how I got into equity crowdfunding, I love this story because I was in college and I was majoring in finance, and at the University of Miami, I thought I had three career paths. This is a true, like, so silly. Three career paths. You could go in investment banking, which I eliminated because that just sounded terrible. Sales and trading, which I don't know. It was really cool, but like I didn't ever read any like industry research reports on the sell side. I was just like, I don't know, conflict of interest, and it just wasn't my thing. And private wealth management. So I was like, okay, that sounds kind of cool. That sounds like a chill job. I'll just go into private banking. But then I just like, gosh, I feel like I should be doing something to push myself a little bit more. Nothing against that field. Bankers are awesome. But like, it's just a little bit like there's a massive amount of time being spent on the most minute details of like this little like line has to be fixed to like help this like $50 million client or whatever. And I was like, but really the best deals were always going to the richest people. So my inspiration going to equity crowdfunding was just being like, I want to invest in these deals that I'm helping clients invest in. I'm just like, what the heck? This is unfair. And I didn't even know about equity crowdfunding. So like, flash forward, maybe like a year after my multifamily office job, I see an ad on TV about Kevin O'Leary and Start Engine. And I'm just like, wow, that's awesome. I didn't even know this was possible. And it was on CNBC. So it was reasonably legit, I assumed. And
yeah, it's got to be legit, right?
And it was awesome. Yeah. And then, I made my first investment. It was in Start Engine itself. So I invested in Start Engine because I thought it was like the cool. I'm a little bit of a nerd. I wrote like an 8-page thesis on it. The thesis didn't play out exactly, but like, I still love the company, love everything about it. Right. But and they're just still doing well. But the thesis was, they're owning pieces of these companies and they get 2% of each company they raise on the platform for the most part. And I didn't want to do all the research on these companies because I didn't have the time. So I was just like, okay, I'll buy Start Engine and then I'll get a piece of all these companies. That was a large part of the thesis. And eventually I was just like, I got to work for this company. Like I want to be a part of the equity crowdfunding industry. I own shares in you guys. How can I be a part of it? And then, started off as a campaign manager there, then ran the day-to-day operations of their transfer agent, their in-house transfer agent. And then that was awesome. And then it kind of became a point where there were two things. One, I wanted to push myself and really take on code versus like just be even better at operations by going to code. And I just felt like I had to do it. But two, I mean, the funding portal versus the investor side is a really interesting dynamic. There's more and more funding portals coming up every day. Funding portals are kind of a unique situation, I think. Like at the end of the day, all that really matters to me is deals to invest in. Like that's the greatest thing. Like if WeFunder does great, that's awesome. If Start Engine does great, that's awesome. If another small portal is great, that's awesome too. But more deals is great. And the more competition of the platforms, the cheaper it is for the fees and easier it is for companies, more, understanding of the industry. It's great. And then for me, it was just an obvious, like, there's just so much need and also like, how cool would it be to just keep on building the research infrastructure to support all these platforms? And my co-founder loved the idea too. And we just went with it.
So I do want to double click on your college experience because I read something that said you earned more in college than you did your first year in the real world.
Oh
So
yeah,
can you
yeah.
tell us about that ed tech money printing startup that you had in college?
Well, it was a money pit when I got out of college, but it was a money printing startup in college. In college, I tutored a lot, and a lot of the tutoring was just it was all online. So freshman year summer, I typed in Google, "How do you make money online?" And usually those Google searches don't really go as well as you'd hope. But this one went fantastically, and I started off working for a company as an independent contractor called Varsity Tutors, and they're now under the parent company Nerdy, and they paid me $15 an hour, and I was ecstatic. I was so happy because at that time, you'd be making $10 an hour at McDonald's, and I got to work $15 an hour doing math in like pajamas essentially. And then I realized, wait a minute, they're charging their students $70 an hour. And I'm getting 15 out of this. This is crazy. So very compliantly and legally, I just eventually I weaned my way away from varsity tutors and then got my own clients. And it was just a business of referrals. And I was charging $50 an hour, but then it was incredible because, well, when I was working at varsity tutors, I was working 12-hour days, a lot of it during the summer, right? So if that's 12 hours at $15, I think that math can't something like it was around up $200 a day, around there. And when then I started charging 50, and then eventually had some clients that were paying 75, and I could have gone higher, but I didn't feel right doing it. There was too much pressure when you go higher. And then it was awesome. And then I went away from it, and I thought it was easy. I really did. I was like, oh, that sounds easy. And lightning is always in the bottle, whatever the expression is. And then my first job out of college was fine paying, but like I didn't realize how much money I was making. And then I tried to turn it into like a scalable startup. It wasn't really, it didn't scale. It was all about like the referrals, organic brand, people that like the product, people that liked me. And then it's just harder to like scale that. I learned a lot of lessons from that too. I mean, it's part of why Hubtas, I mean, we are really doing really well, in my opinion, and my co-founder's opinion, bootstrapping it. And our costs are essentially zero. I mean, we have insurance costs. We talk to a lawyer once or twice. I mean, we have server costs, which are very minimal. I coded the whole thing myself. So it's something where there's no rush to scale. And I always think, who's the bigger winner if you lose like $10 million and go bankrupt after VC funding, or if you just have a nice bootstrap business and, we don't plan on having an exit. Like that's kind of part of what makes this really great for us. Like we want to be able to really just like keep building this brand and keep building these research tools and see where that leads.
So Tim, that's kind of a good segue into my question. So you went through the demo, you talked about, bootstrapping the company, coding the thing yourself. So I'm interested, what's the hardest thing you encountered when trying to build the platform? And what was the most difficult obstacle for you and your co-founder?
That's such a good question. I mean, I think it was really, well, there's a lot of difficult things. I think one difficult thing early on was when I really was struggling to learn code. And it was like, gosh, maybe I should have gone the no code route with Bubble. Or another no code provider. And it took a long time to like hit that bridge of like, okay, now I've made the right decision. But there's a lot of like opportunity cost and risk there, I felt like. But what's crazy about it is AI makes it easier to code than no code is. The AI doesn't help you do no code as well as AI helps you with code, is what I've learned. So I think the challenge there, and two is I think we're going to experience this. It's always easy and fun to have a product or an idea, and always the challenge is, will people pay for it, right? And that's what we're going to run into and see, like, will that happen? And we're definitely playing the long game on this one, because in some ways we built this tool because we think it's really powerful for ourselves. I mean, I made an investment. Unfortunately, that company decided to not go through with their raise, probably because I'm assuming they got they might have got better terms with the VC or something. I was disappointed with that, but they're really good research tools where I do believe the infrastructure of private investing for regular people is going to really grow. And like, there would be a lot more people, I think, wanting to do what we're doing if there was more of a long-term horizon. Like, I think it's very easy to say, yeah, I want to be a venture analyst. And why do you want to be a venture analyst? Because you're making $200K a year or something, right? But at the end of the day, this is venture analyst. Like, this is true. These are securities registered with the SEC. And there is a lot of opportunities here because even if, let's say hypothetically, let's say you're more pessimistic on the space, and honestly, I am. I'm much more skeptical on the average equity crowdfunding offering than like, there's a lot of stuff that it might be good ideas, great businesses, great people, but like probably aggressive terms, and they probably won't have an exit. Maybe, I don't know. And what I'm saying there is like, there's just, even let's say hypothetically, there's like just 5 to 10% of people that are just like, I just want to give regular people good returns. Immediately, you have some opportunity there because there's no real buy and sell market. It's kind of whatever you want it to be within reason, right? So I think there's just a lot of opportunity.
So I also want to get to something that we kind of touched on a little bit, which is the private versus public market thing. And thing you talked about, and what Hubtas is providing is data points to go off of to allow people to do that research. So in your experience putting together the platform, what data points are available? What data points are missing? And how has that kind of been a difficult thing to juggle?
For equity crowdfunding investors, or for Hubtas itself, like with our platform's data, or like just data available to investors itself?
Let's just do data in general, just for the the regular crowdfunding investor.
So there's a shocking amount of data that's available in these filings. Like it's pretty stunning, and I think why we have a really big competitive advantage. Like I'm not gonna say I have 10 years of engineering experience, but I do have enough to know that I believe we're doing it in a unique way by scraping the SEC filings themselves. We're a 2-person team, and that's why I was really excited when I said like we put a lot of emphasis on the back end. Like our back end's really good now. And there's 60-page filings, and that back end can get better and better and better, because at the end of the day, information, there's 60 pages of this information. And I mean, I read through some of these cover to cover, and I'm just like, wow, on page 27, that's a big red flag. It's like this, but the part of it's like standardized way to do this. We don't want to do investment advice, of course. We don't want to be highlighting things. It's kind of independent research. You do it yourself. So one of the challenges that we're having is how can we take some of those red flags that are like, whoa, that's kind of crazy, and then putting that in a way that's digestible. But also, the equity crowdfunding filings are really done in 2 ways. There's the XML. Well, there's 3 ways I think you can get the data. There's the campaign pages. There's the XML. The XML is a very standardized. You're familiar with that? Right, standardized, like revenue most recent, revenue prior, and it's missing a few fields that if you were walking down a financial statement you'd like to know, but not a big deal, right? They don't have cash flows, but then they have then you have the SC statement. Every portal is slightly different. So when we built that back end, our Python code is not talking to each SEC filing the same way. WeFunder has like 9 or 10 different pages. Start Engine has 1. And Honeycombs is like the easiest thing in the world to go through, right? So there's just all these different, the challenge is like, for the regular investor, it's not your full-time job, which it is very few people's full-time job, how do you go through this information in a reasonable way? And I think there's 2 ways you can go about it: giving people great data and giving people really easy to use data.
So, Tim, you have a newsletter called The Retail Capitalist, and in the newsletter, you wrote, "Don't build for potential investors in mind, build for your customer," which I think is a great piece of advice for startups in general. But with that being said, who is Hubtas built for?
Hubtas is built for 90 to 95% of people out there that just can, like 90 to 95% of people that are not accredited investors. That's currently what we're built for, right? Now, we're building for now and also for a year and 2 years out here, because the data that we're having, I personally don't really believe that data from 5 years ago in this space is very valuable, to be honest. That's not like, you can have that take, but like, I think the here and the now with live companies is very valuable. So I think it's built for people that just anybody in America that wants to invest in startups, but it's going to be built for more people in a step further, or soon. B2C with retail investors at $10 prescription is very challenging and tough. The research market is very large though. So unfortunately, like with investment banking or banks, you have a research division. The research division loses money, but then they sell the research to clients who can go through their sales and trading division, right? Hubtas is built for regular people today, but in this new version, we have an enterprise tier. The enterprise tier, we don't have prices up because it could be a lot, but we have our own API you can tap into, HubSpot integrations, CSVs, and leads from all these data that we have. So it's kind of the secret sauce, I think, from a business standpoint, is that enterprise tier. Going to financial advisors, going to people looking for leads in the space, lawyers or accountants. And then when more people could potentially become accredited investors, then the market opens up bigger, because Hubtas is about giving people access to private deals. And the true venture market is so covered and saturated, but there's so many businesses out there. I think of it this way, actually. I think this is interesting. Like, I'm not saying that, like, well, I do believe that, like, Andreessen Horowitz has a very unique advantage, because they are getting Y Combinator, for example. They are getting the best. But the average accredited investor who has $1 million net worth, like, they're not getting the same deals that Andreessen Horowitz is getting. So a lot of these deals are going to go through equity crowdfunding. And I mean, you're reading more in the news about VCs tightening their belts. It's getting harder and harder to get VC funding. These companies are going to equity crowdfunding, investment crowdfunding. So there's just so many people that could use this data. It's just, how can you get in front of those people? And that's going to be the challenges we're going to work on next. There's always the ability to put ads on the site, but really, I tried to build this wholesomely. My co-founder tried to build this wholesomely. We just want people to use it, enjoy it. Hopefully it's a service that provides so much value that it's like $10 a month, $15 a month. I have to do that if I'm actually serious about these markets. And then see how that goes, but target the businesses as the core bread and butter.
So with that being said, where do you see the crowdfunding ecosystem in the next 5 to 10 years?
Crowdfunding ecosystem is probably, well, it's fascinating asset. I don't know if you're familiar with, like, Dealmaker. But Dealmaker is, I'm a huge fan. I'm from the outside. I've never worked there or anything, but their tech is just, like, stunning. I think I was even more bullish on them a little while ago, but I see the crowdfunding industry going away from platforms in general, right? So you don't have to go on a start engine. You don't have to go on a WeFund. You just invest in a deal and you find it, and you can probably find that deal on Hubtas. The reason why I said I'm slightly less bullish on Dealmaker than I once was, like, Dealmaker is incredible, is because I do see the value of a community that is forming around Start Engine and that is forming around WeFunder, because people don't really feel like they need to invest in 20 different platforms. And that totally makes sense, right? So some people are loyal to Start Engine, for example. You might have the owner's bonus. You might have loyalty to the secondary market, right? But I do see equity crowdfunding being more, said another way, it's interesting. Like, when the Jobs Act got passed, and, like, this was all just an idea, everyone probably wondered how this industry was going to go and how it was going to form. Maybe people assumed there's going to be some giants. Maybe, I don't know. But there's a big three. There's other niche ones, and now you have those. They're like I don't know what they call them, like Shopify, like Shopify for capital markets. The Dealmaker is. I see it being more, a business needs money, and equity crowdfunding is just a viable option. And there's just more and more good deals that regular people and even richer people can invest in. And I think right now we're starting to hit an inflection point. This is anecdotal. This is not, I don't have data to back this up, because the reason why I said that the data, though, is not as valuable 5 years ago, I think, is because there were less great deals, in my opinion, versus great marketing pitches. I definitely see investment crowdfunding going away from marketing oriented to research and data oriented. And that will be big winners on, hopefully, right? But right now it's still very marketing oriented. You have a great campaign video, and those are awesome. You need a pitch deck, you need assets. But at the end of the day, if you have a good deal and you're a good person, and you just, those are the kind of deals that might be the best investments, versus people who spend a lot of money on their raises. Companies that spend half their raise on marketing to get more raise dollars. I just see more investments being available, and quality ones too.
So you talked about, which I thought was a very interesting point, VCs tightening their belts and that helping the crowdfunding industry. And I actually didn't think about that. But, as the crowdfunding industry continues to grow, which it has considerably since the Jobs Act, it's going to become more mainstream. I guess maybe in a pessimistic viewpoint, what would you say is the biggest constraint holding crowdfunding back? You talked about how the lack of quality companies, and that's maybe been a stigma for some people for a little bit of time. So what would you say is a constraint for this industry and today?
It might not necessarily be the lack of quality companies. It might have been the lack of quality investments, I would say, right? Like, a lot of these companies are really great companies, great people running them. They're just not, like, there's might not be a synergy of, like, this was good for the investor and it was good for the business. Because at the end of the day, portals make a lot of money on companies that are raising on there. It's like, it's an interesting balance of, like, is equity crowdfunding right for the right person, the right company? I think the big challenge from a company standpoint is it's actually quite expensive and it's quite onerous with what you have to disclose. So there's very little, like, I personally believe there's very little fraud in equity crowdfunding overall. Very little, because there's so much disclosures. Like, if you wanted to commit a crime, you're not going to give a 60-page document to the SEC that lives there forever. You cannot delete those, right? So, like, I've seen some things, but like, it's not like the most optimal way you would assume. So it's very onerous. It is expensive. I mean, it costs like 15K on a lot of platforms to raise money, right? So, and then there's fees on top of that, variable fees. So if you're just a regular business starting out, or a very seed idea, is that the risk you want to take, or do you prefer just getting a 50K check from an angel investor, right? So equity crowdfunding, investment crowdfunding, I think overall has struggled to really tap into that seed round. And then from the investor side, big challenge is just a ton of deals. And I think a lot of investors have gotten burned. And this is not anecdotal. Like, well, I guess that is anecdotal actually, but working at a portal, right? Like, just seeing comment pages. I mean, people don't hold back. And these are not professional JP Morgan analysts that have to be on their best behavior when somebody does something wrong, right? They're saying some mean things in the comments when people do things that they don't want to do, right? So it fool me once, shame on you. Fool me twice, I might not invest again, is kind of part of it. I don't think that's a headwind at all towards the industry, because there's just so many opportunities, so many deals. But the big obstacles are, one, perception, from the investor standpoint of, is this company only raising because they're because they couldn't get VC funding? And then from the company standpoint, do I really want to disclose all that I'm doing if I'm an early stage company? That's a really interesting thing. I mean, you have to give up your whole business plan and your risks, and 20 pages of risks. And Star Engine, for example, says how much you get paid. Other portals don't, but that's one reason I think Star Engine has really great, unique investor-specific disclosures. As an investor, I think they have the best disclosures out there, right? So you just have to give up a lot of information.
So another thing I've kind of pondered over my time looking over crowdfunding, I've been active now for not too long, but is I feel like there is going to be a considerable hurdle to getting a lot of people into crowdfunding. There's so many people that already don't invest in general because it scares them. So what do you think is the market that is untapped for investors? Or maybe a better question is, how can crowdfunding as an industry attract a bigger audience and get more people on board to see an asset class that really can be very beneficial for so many people?
I think WeFunders leading the charge on this, in my opinion, with their community rounds. They're doing a rebranding effort. They are essentially saying, instead of thinking of this as investment crowdfunding, think of this as you get to invest alongside other VCs. And they highlight Mercury. I mean, they just redid their homepage today, actually. They highlighted Mercury, Bank, or Financial. There's a couple other ones that they've had that they keep highlighting. I mean, Meow Wolf, for example, this is way before in the past, but that was a massive success for WeFunder, right? So these good companies. What was the question again? I'm sorry, I missed the exact question. I forgot.
So how can crowdfunding become a more mainstream
thing? Oh, yes, I had a thought
in
my mind, and that's why I got confused. Mainstream, I think it already is mainstream, to be honest, because and I wouldn't have thought this myself. Like, I have to say, I have been disappointed with the progress of crowdfunding in the past 2 years since I've really been involved with it. I thought it was going to be like that, and it's kind of like that. I mean, but it is stunning how many dollars are invested in these deals. And I'll tell you why it's so stunning. I actually pulled up one stat. If I don't have to share my screen. But yeah, this is insane.
I'd love to hear it.
So I'm sure you're familiar with this, but it hit me for real when I actually went through it, right? So you think about how much money, let's see, where is it? Gets invested in these companies, like millions and millions of dollars across all these portals. And you look at the investor limits, like what's the average income in America? I'm guessing like 55K across the whole country.
Something like that, yeah.
Yeah, so your 12-month limit is not that much. And I'm working at Star Engine, and I'm seeing, let me stop sharing my screen. And I'm seeing you see the escrow, and there's just investment just flying through, right?
Yeah.
I'm pretty stunned how many actual dollars go through here. I think the interesting question is, unfortunately, more than a minuscule amount of people don't seem to realize exactly what they're getting into with their investment. They might want their money back. They might be like, that wasn't a good idea after all. But there's a lot of progress being made on the secondary markets. Star Engine released a marketplace, for example. Cedars in Europe has their own marketplace where you can just list. It's not an ATS. It's not like what's it called? An alternative trading, I think it is. but it's a secondary market, right? It's an alternative trading for secondary market or whatever. So it's not real time trades, but there's a lot of progress being made in that too. Real time trades in the marketplace. So they're solving that secondary issue to alleviate some of that investor friction on that where you want to sell.
So I do think that's an interesting point, because if you can invest in a company and almost see like the fair market value of the company you invest in per share slowly start to creep up, kind of like the stock market, investing in stocks, I think that would incentivize a lot more people to invest in the companies. And then another point I want to make is I think as the ecosystem continues to grow and grow, the startups are going to realize how valuable data points are, and they're going to start including more and more data, which is then going to make more and more people be willing to invest in those companies, because it's kind of like the credibility, right? They can track the revenue, they can see the expenses, they see all the disclosures. So it's almost taking it from like a retail perspective to a almost professional investor mindset perspective.
I totally agree with you. I think that it's so like I think I try to think of myself, or I do think of myself, and I try to always be an independent thinker. And I know the ridicule that I get from my good friends that I'm so serious and bought in on this industry. I think it's an awesome industry with so much opportunity in it. They work at banks and they're like kind of like grow up some ways, like where's the money? And I think there will be. So like, will I be the fool in this or not? Right? Like, I think there's so much. There are professionals coming into this. I mean, the guy who basically wrote the Jobs Act, he was one of 3 people that wrote it. I wrote a piece on him actually. His fund. He's launching a $5 million fund, and I think he has about $1.5 million already committed for institutional money to invest in equity crowdfunding deals. And he's using a quant thesis, which is fascinating, right? But it's there's a lot to learn from that. His quant thesis, for example, is looking at companies. They're not trying to pick winners, but pick companies that are most likely to get a follow-on VC investment. And that really was interesting to me, because technically that's a validation. I mean, if you raise from equity crowdfunding at 20 million and you got a VC round at 40 million, like you are up double the money. And if you can actually pick those correctly, then that's great. So I totally agree. I mean, there are going to be institutions that come in here for sure. And I saw that happen at Start Engine, right? You'd have an accredited investor be like, I want to wire 100K, 200K in these companies. The problem with that though is, while these portals do, I assume others have these nice incentives for large investor programs where if you're a really big time investor, you get a lower fee. It's just easier if you're an accredited investor, just give somebody 100K and then not have to deal with all the other stuff, right? That's kind of the challenge, I think. If you really know a rich person, do you want to go, or that wants to invest in you? Is it worth the extra onerous costs and legal disclosures? And maybe not for an early company, but there are Y Combinator companies that are on WeFunder all the time. I mean, there are some really good companies that are, again, the community round, right? That are getting investments from VCs that are opening up a sliver to retail investors, because equity crowdfunding, investment crowdfunding is not really about the money as it is the marketing a lot of times. If you're doing investment crowdfunding purely for money, you're probably in trouble. Like, there are a couple companies that get away with that, but like, it's not a great generally idea to do it purely for money. But if you do it for marketing too, your consumers are your best. The investors are the best brand ambassadors. I mean, I'm invested in Start Engine, and that sticks with me. I mean, they're always top of mind when I think about equity crowdfunding, and they have 36,000 of these investors, right? WeFunder has their own investors. So then you take that for a consumer product. I mean, my co-founder is going to start a series on reviewing foods that are doing equity crowdfunding raises, right? So she has Blackbird Pizza in the fridge. I believe that's the company name. So how cool is that? Like, you're just like so fascinated by a company that's raising money that you can invest in. You just want to try their pizza, and then maybe tell your friends that you're an investor in it, and like you want to get Blackbird Pizza. It's the same thing with public stocks. I mean, one of my really dud investments was a Boston Beer Company, and I lost like 50% on that, and then gave up. And then I always was drinking Trulies. I didn't drink any White Claws. It was only Trulies. So I think you see a lot of that in investment crowdfunding.
I'm an investor in Yayo Tequila on Start Engine.
Oh, fantastic.
Yeah, and I drink it all the time. It's fantastic. Not even trying to plug it. I mean, it's the same thing. It's kind of cool that you can kind of become a part of. You feel part of the product. Like, you're like, oh, this is great.
Because these companies are not like the big corporations like a Microsoft or like something like really out there, right? It's just like it's an entrepreneur and maybe a couple other people with a great idea, and you love the product, and why not be a part of it? It's like Kickstarter, but you get equity for it. You participate in the upside. It's incredible.
So it seems, I've been thinking about this a lot. It seems like a lot of B2C startups that do crowdfunding, the crowdfunding almost serves as like a go-to-market strategy for them to get in there, build awareness, get traction. Because once you see a company, you realize you can invest and it's a startup. It has all this upside, but you can also buy the product and try it out.
Yeah.
Like, why would you not want to?
Yeah, I totally agree with you. That's the future of equity crowdfunding. It's just more and more people realizing that, and then there's also going to be more and more people that are excited about the really serious deals too. It's just a mix of both. Like there's just once you experience it, there's really no going back from it. Like if you see another product that you like and you've already done it once, and my thought on this is, does it really matter if it's on Star Engine or WeFund or Dealmaker or not? I argue no. But then there's an arms race now that I'm seeing of trying to get the best companies on these portals. So we'll see how that plays out. I mean, an example here is Star Engine's paying people $10K to refer founders, right? Every other portal has their own referral network. So there's a lot of incentive a lot of money being handed to people to get the best companies on their own platform just to try to stay competitive.
So, Tim, I kind of wanted to transition into a little bit more about you. We've talked a lot about crowdfunding, which I could talk about all day. But you talked a lot about your passion for math. Where did that start? Or maybe where did your passion for coding start?
Well, I think that's a good question. I mean, math, I am not good at math amongst people that are very good at math, right? I got a good SAT score. I took a few math classes in college, and it was just a chill job versus serving burgers or something, right? So like, I like to think and stuff, but like, I'm not like, coding truly was, you're in an operation. I'm in an operations role, and every time I had a big challenge, you got to give engineering a ticket. And an engineering ticket. And I just kind of wanted to solve my own tickets. And when you're working 70, 80 hours a week, it's just not, I didn't feel like there was a lot of time to learn a skill like that. And it truly did take like all day, every day for months at a time to be able to code at a reasonable level. And for me, that was just like, I didn't really think about or care about the opportunity cost, because I think skills are just like what really matters in this stuff. I mean, I'm a little poorer than I would be otherwise if I stayed at a job, but now I feel like I can just do a lot more things and take on a lot more challenges. So coding is essentially just a tool to accomplish challenges. I mean, there's tons of no-code tools out there. There's tons of, you can use AI to help you code, right? But there's a lot that still, I think that coding is really like the frontier of when I have a problem that can't be solved in Excel or can't be solved with SQL. It's like, what can I do that like is a little bit further than that to just hit new boundaries, right? So I just thought it was cool, and I like it and stick with it.
So kind of to go off that problem solving thing.
Problem solving.
What do you like about being an entrepreneur?
Well, I really love this because it's so great to work on exactly what I want to be doing, right? That's like a true specialty. I mean, there are a lot of entrepreneurs out there that probably don't have the exact luxury of working on exactly what they want to be doing, but it's a great business opportunity. And I think I found the mix of it's a great business opportunity and I love doing it. Tutoring is chill for a job. This is like truly like if I could be doing anything reasonably productive during the day, it would be this: researching companies and trying to put together an ecosystem, a platform to make it really easy for myself and others. I think that like I actually loved working for the bosses I've had. Like I've loved working with my coworkers. So I miss that the most, like miss the work camaraderie, but I do like just being able to work on what I want to be doing and work towards something bigger, building something bigger each day. Being an entrepreneur is great because it's generally frowned upon and discouraged in professional workforce. I've learned to be a generalist. And I feel like people like if you say you're, the coder, right? CTO is a silly title when you have two people at a company, right? I just do the code and get technical, right? But when you say you're doing code, people might not think you're able to do marketing. You might not think you're able to do sales. I like a lot of things. And we're going to release a music video demo of our product that I wrote a little rap for. And I can't wait to do that.
Really? That's awesome.
Yeah. And my co-founder is doing the what's it called? The directing for it, chopping it up and using some AI, and we'll see how it goes. But that'll hopefully get clicks, right? And if you're at a 20-person, 30-person company, there's going to be somebody probably a lot better at you at making videos, right? But it's really fun to be able to push new boundaries, explore, and hit those new creativity that new creativity, because that I think leverages in ways that are not really expected. And I like being able to tackle on a lot of different things, and I consider myself to be like, okay, well, since I'm focused on this one particular thing, it's okay to like do a little bit of generalist stuff around the edges, So
talking about being a generalist, just from an entrepreneur's perspective, What do you think the biggest lesson you've learned throughout your journey has been being an entrepreneur?
I really screwed up the first time I tried to build a startup, like really bad. I mean, I made a lot of money in college, and that's the success of like a lot of people, right? Like the metric of success, if you're an entrepreneur, make a lot of money, that's awesome. And I made about 70K, right? And like in 4 years, that was awesome. And it wasn't like a year to year comparison. I mean, 70K in college is insane, right?
Yeah, that's a lot.
Yeah, and like
$5 is a lot in college, right? You can make that stretch.
My first time out of college was 65K, and I was just like, wait, what is this? Why would I just keep tutoring full time? So it's I forget the topic. I was just laughing at a story I had. My bad. I'm not
What was the biggest lesson you've learned throughout your entrepreneur journey?
Sorry, yeah. It's so silly to build for investors and scale too early. Or think about scaling. There's just like, it was 2021. Times were different. Everyone was just losing money. I was just like, well, if the competitor ahead of me is losing, $1 million a quarter, and I'm losing like, 3K a quarter, I'm winning. And they're just like, that's not the right way to think about anything. That was just really dumb. And it's just turning a profitable business into something dumb. The venture route and losing money to spend money to gain market share makes a lot of sense, right? For the right company, the right people. But it's not right for me. It's not right for what we're building. So my lesson is just like, keep building. At the end of the day, the cost to hire somebody or the cost to do something that's not yourself is very high. So if you're going to raise like 50K, right? Like, honestly, like if somebody was trying to hire me at a startup and I was just like, 50K, like that's cool, but like, I don't know, like I have my opportunity cost, I'd like to work on my ideas, right? Like there's a limit of, so it's like, what do you need to hire somebody that can actually make an impact versus like kind of make an impact? When you're doing something like more from the ground up, there's a lot of like, literally it either gets done or it doesn't. And then as things get bigger, there's more room for redundancy and stuff. So it's just expensive. Like there's scaling responsibly. I want to go to market. I want to get revenue from people that really love the product, hopefully tell their friends about it. I mean, that's at the end of the day, if we get 1,000 users, let's say in a couple of weeks, and only like let's say 10 pay, right? That's a win because that's scalable. People like it, enjoy it. That's how the tutoring business started, that I'm making $15 an hour working for another company. And then next thing I know, I was having to turn down clients. And when I studied abroad in Europe, I was cash flow positive until I went skiing in Switzerland, right? Like traveling to like 18 different countries because I'm tutoring in Czech Republic for people that are in like California, right? So it's just like this love of the game, like it just scales, you do it, and then hopefully it works, right?
So I got a question for you. This is a question that I was deciding between two questions in my head, but I'm going to go with this one. So comes from Roloff Bota. He's at Sequoia Capital. He's a partner. And he says he asked this at every investor meeting.
I thought you asked a question for me. I was honored, but it's okay.
No.
I was joking.
I could have just went with that. No. The question is, what is the scale of your ambition? What is the scale of Hubtas's ambition?
I think that's a great question. I think we are actually reasonably likely to win this industry for anybody who's currently in it, right? I think that is like a big shock. The barrier to entry in here, it is not a winner take all in any way, right? Like even in the public markets, you have tons of different research platforms. Even for like debt ratings, you have three big ones, right? But the ambition is I want to be the go-to name in the space for research and private investments that are not targeted for like the really rich people. To be a household name, I want people in their SEC filings to cite Hubtas for comparables. I want people to to think about when to make a startup investment to think about Hubtas and do the research there first. And that would be a huge win. I mean, if that all happens, the money will follow. My big thought with business is there's a rocket mortgage. They call it an ism, but it's really just a principle. It's like numbers don't. Oh, I shouldn't forget one of the guiding principles I have. Numbers. Or money it's something like money is not meant to lead, it follows. I botched the thought on it, but like if all those things happen that our ambition hits, I think it's going to be a fantastically successful financial venture. So that's like all that together is the gist of it.
So how is Hubtas going to change the world?
Change the world? I mean, that's a lot. That's I don't know if it's going to
change the world of equity crowdfunding. Let's go with that.
That's a good question. So the build your own algorithm. That's awesome. I mean, if we took quant factor investing to bring it to startups and regular people. Like if you think of all the different metrics and you give them different weights and you arrive at a certain score and then you get an automated email every day with different scores based on your criteria, that's insane. Like To me, that changes everything about crowdfunding, and I can't wait for that to be like. Hopefully, that's a really receptive feature. But that to me is like next level. So we'll see if it is for other people too.
Awesome.
then-
Well, you go, Connor. Go ahead.
Well, Tim, I was going to ask, what do you think? What book have you read that's most impacted you? That's a question we get a lot that that the listeners want to know from founders. So, what book has most impacted you?
That's a good question. I really liked the simplicity of the psychology of money. That's like, I think a must.
I'm a big fan of that book.
You read it?
I'm big fan.
Yep.
Yeah.
Everyone's read it.
Brendan
so
gave it to
really
me to read too. Yeah.
Who did?
Brendan gave it to me to read
I
afterwards.
gave it to Connor. Yeah.
Nice. It's not a very like cutting edge recommendation, but that's just so simple, easy to read. It's just like I think that was great because they had one line that stuck out with me. The only thing you know about like somebody who has $1 million or $100,000 cars, they spend $100,000 in the car. There's like a lot of like things that you know but don't really think about, and just kind of for me pushed a lot of independent thinking. Like don't get caught up in like the hype, or don't get caught up in what others around you are doing. Just like stick to your principles, stick to what you think is good, do your research about it. But that was kind of the gist of that. Gosh, I like reading psychology, but I don't read as much as I should anymore. I read the news, and that's I work all the time. It's not a
The life of an entrepreneur.
well, it took a while to learn code. Now I got to actually keep doing code, So it's like I gotta. It's a lot of both of that, balancing both.
If you had to give one bullet of practical advice to an entrepreneur, what would it be?
Oh, you actually got to enjoy it. If you're not having fun with it, it's. I don't think going into entrepreneurship is a financially wise decision generally. Humbly, I can make a good amount of money at a company. And it's opportunity cost, and like if you're doing it for money, you should just be a banker, right? Like I think entrepreneurship is about like doing something you really enjoy, and make money off that too, because you got to sustain yourself. And if you enjoy it, you got to want to keep doing it, and then to keep doing it, you got to make money, right? So, but if you're not having fun with it, what's the point? You might as well just get a high paying job and chill. I mean, there's plenty of nights I just prefer to chill, and like I still find time to relax, obviously, but like it chose this for a reason. It's awesome, and that's not to say like I'll never get another job again. Like I like working, and to be honest, Hubtas is at a point now where it's really reasonably automated, powerful in the back end. So it's kind of like, let's see how receptive people are to this. We're going to do some hardcore marketing and try to push it because, we're really passionate about it. A lot of people that are using it are very passionate about it. We've got great initial feedback so far, which has been really exciting. And then take it from there. It's not something where we're going to build 10 years if it's not getting that right reception. But each step along that way is another hurdle to climb where it's like, okay, validation, keep going, validation, keep going. But on this idea, I have a lot of innate validation of like, this is awesome because I want to keep building this. And my co-founder feels the same way. So when you have both of that and you just keep building, and now we're going to be selling on top of building, it's just fun. I always think like, not to diss like Drizzy as an example, right? But like Drizzy, the alcohol delivery, like who cares if you start an alcohol delivery company? It's like not like the coolest thing ever, It's like it's a money thing, but like, is that really that fun? Like, I don't know, just work for Uber at that point or whatever. I don't know. This is kind of like this is just pretty awesome stuff.
Well, Tim, I thoroughly enjoyed getting to know you and your company, I can't wait to see what's made of it. And thanks for your time. And I know Connor enjoyed it as well. I don't want to speak for coming on, Tim.
Absolutely, it's so great. I mean, don't sign up for anything for one more day before you sign up for those automated alerts. I got to do some fine tuning with the links. I just pushed everything from stage to production, so I'm just doing some plumbing. But it's going to be great.
Awesome. Well, for all our listeners out there, check them out. Hubtas.com. If I got that right, Tim?
Yeah, you did. Yeah.
See
and
what
music
you can
video's
do.
Coming soon.
Oh yes, and check out the music video. And hopefully when it comes out, we'll push that too, and make sure people see Tim's great rapping. So, with that being said, thank you for listening, and we will see you next time.
Of course.
We will see you next time on the Next Big Thing podcast.